Hey, I'm Trey with Titan Realty. I'm here with Harrison Walker from Refine Mortgage. Today we're going to be going through a few different questions on common mortgage questions, common home buying questions, and different things people might need to know during the real estate process. So the first question, Harrison, why is it recommended to get a pre-approval for a mortgage before you look for a house?
Yeah, so recommended that you get a pre-approval beforehand so you know exactly what you're able to buy. Most people, they really want to go look at the house first because that's the more fun part.
For sure.
But it is beneficial for you guys to know exactly what you're qualified for. Pre-approved is even better because that means we looked at your documents, and that way you know exactly what kind of house you can be looking at, and you're not looking at something that's way too far out of your range as far as could be way too high, could be way too low.
For sure. And one of the things about pre-approval is, if you do find a house that you love and you're already pre-approved, that same day we can make an offer on the house, and that, really diminishes your chances of losing out on the house that you might absolutely love. Next question, what is escrow and how does it work in real estate?
Yeah, so escrow, that's basically taking your taxes and your insurance. You're going to be, people say you're escrowing your payments. So your taxes and insurance, you're going to be paying a little bit of that each month, and that's going to be going into what's called your escrow account. Your escrow account, at the end of the year, they're going to pay out your insurance premium and also your taxes, and then you won't have to worry about making that payment separately.
Awesome. Why is it important for you to have a good credit score when you're going to look to buy a house and get a mortgage?
Yeah, credit score, very important part, and the credit score, the higher it is, the better your interest rate is going to be, and it also helps with just approval in general. So if you're on, let's say you're doing an FHA or a VA loan, you could have a little bit higher of a debt to income ratio if you have a higher credit score.
Awesome. So what role does the appraisal play in the home buying process?
Yeah, the appraisal, very important part of the home buying process. So when you make an offer on a house, let's say you're offering $300,000 on a house, and that's what it was listed for. The appraiser goes in and they just validate that that house is worth $300,000. So the appraisal is, I guess, a good way to know that you are, whatever you're paying for, you are getting that much in home value back.
Yep. It also helps with the risk mitigation. Banks aren't going to want to lend $300,000 on a house that they know is not worth at least that amount, because it's just a bad investment for them. It's too high risk. It doesn't make sense.
Yep.
Let's see. Next question. Can a buyer request a second appraisal if they disagree with the initial value?
Yeah. As far as if the value comes in low, if you disagree with what the value came in at. On a VA appraisal, this is something that is called Tidewater. So the appraiser will basically call Tidewater, which they won't tell you the value. They'll tell you, we're calling Tidewater, which means the value is low. You'll then submit comps to prove the value of the home. The appraiser is going to take a look at it, and then they'll issue a value after that. Your other conventional, your FHA, your USDA, typically you're going to do the same thing. It's not called Tidewater, but you'll get the appraisal, you'll see the value of it, and if the value is low, you can submit those comps to say, hey, this is what I think the value of the home should be. And then the other way to go is just to negotiate with your seller. If the value comes in low, that could just mean that the house is not worth as much as you put an offer in for.
Yep.
So at that point, you go to your seller and you just try to negotiate that price down to whatever the appraisal came in at.
And if at that point the seller decides, this isn't worth it for me, sometimes they can just allow you to back out, and that's the obligation that they have because they are selling. A lot of the times, sellers that are really firm on a certain price, they'll only offer cash or conventional loans for that house because you don't always have to have an appraisal that comes in perfectly. What are some of the common pitfalls that you see when people are getting a loan? What are some of the things to avoid, some of the things that they typically mess up on or might not understand?
Yeah, definitely a lot of things that you can mess up your loan while you're under contract. So we just talked about this off camera, but make sure you don't go buy a car, don't go buy a boat, don't go apply for a new credit card, don't get a loan on furniture. Just make sure that you're not applying for any new types of credit, because that can really hurt your chances of getting a house. Because we've already factored in all of your current debts. So if you go out and get new ones, you may not be able to qualify for the loan that we initially approved you for.
Yep. Adding on different debts is never a good idea when you're under contract, because it's going to screw up all the numbers that they've been working with for you, and it's going to put you back in the process, one step back to where you were.
Exactly.
And it may cost you money even. In the due diligence period, you may have to lose out on due diligence because you can't complete your contract. So if you're a veteran, why is it important for you to take advantage of VA loans?
VA loans are very good products for veterans. And another thing we discussed off camera is it's not always the best product for the veteran, but it typically is the best product because the interest rates, they're typically pretty low. You have 0% down payment. You also have no PMI. So that's going to be a savings for you each month. And then another benefit to the VA loan is that when you go to refinance, you can go do a VA IRL. And the VA IRL is pretty much just the best kind of refinance you can do for a VA loan. It's just an interest rate reduction. Typically there's no appraisal involved, no credit check, no income check. So big advantages to the VA loan, and if you're a veteran, it's definitely something to take advantage of.
Awesome. So if you're a first-time home buyer and you're going to go and get an FHA loan, is it possible for you to then go from a FHA loan into a conventional style loan after you've got that 20% equity in order to avoid PMI?
Yeah, of course. A lot of people will go from an FHA loan, and let's say your credit was a little bit worse when you started out. If your credit score is a little bit lower, you're probably going to end up in an FHA loan. And then if you work on your credit over time, you come back to me for a refinance. And at that point, we might start looking at a conventional loan product, because if you're below that 80% loan to value, meaning you've got 20% or more in equity. So for easy numbers, let's say your home's $100,000.
Yeah.
Those don't really exist anymore. It'd be nice if they did.
Yeah, right.
But if your loan amount is below $80,000, then that means that you're below 80% loan to value, and you can get rid of your PMI if you go to a conventional loan. So you refinance out of an FHA into a conventional loan, your rate might not even get lower, but if your payment is getting lower, it's really all that matters. So if you're able to get that PMI off of you, even if your interest rate is the same, might even be higher, but your overall payment being lower is what really matters at the end of the day. So yes, you can go from an FHA loan to conventional, and specifically once you're below 80 LTV, that's when it's really beneficial.
Cool. So what exactly is PMI? Now that we're talking about it, what exactly is PMI, private mortgage insurance?
Yeah, so private mortgage insurance is really just a way to protect the lender in case of default. So it's a little bit of a premium that you're paying each month for not putting 20% down. If you put 20% down on a conventional loan, you don't have PMI at all. We already talked about the VA loan, and VA loans do not have any private mortgage insurance. They're guaranteed in a different way. So that private mortgage insurance is just a little bit that you're paying each month in order to protect the lender from default. So that's all the questions that we have for you guys today. If you have any other questions that we didn't answer, feel free to leave them in the comments below, and we will get those answered for you either in a short comment, or we might make another video for them.